So hey guys, in this video we're going to continue on with our series of exactly what plans are available to you. If you have Medicare A and B or going on to Medicare, exactly what does that open as far as the door of opportunity for you? We're going to dive into that in just a second. Turning 65, or if you're coming off of retirement or getting ready to retire and you're going to have Medicare Part A and Part B and a retirement plan, one of the things that you need to make sure that you are covered with is what's called its credible coverage prescription drug coverage. Now the Part D benefit a lot of times does not come with the retirement plan for state, federal, and other retirement plan options. I'm going to go over that in just a second with you on the next slide, but you need to be able to ask the question of if the drug coverage that's part of your retirement plan, is that going to be considered credible coverage? This is going to reflect back to what we've been talking about as far as the Part D penalty, where Medicare will penalize or assess a penalty of 1% towards the national prescription premium average. Usually that ranges anywhere from about $35 to $47 a year, or 35 cents to 47 cents a month. They're going to assess that for every month that you do not have a credible coverage drug plan. So that's very important. And then we're going to take a look at, on the next screen, just the details of how this applies in real life. So if you have retirement coverage, one of the things that I always tell people, if you're part of a state retirement plan, you're going to go on to Medicare A and B, plus you're going to have a state retirement benefit, and you probably need to make sure that your state, depending on the state, in the state of Tennessee, a lot of these people have to add a Part D or a PDP plan because the state does not cover that prescription drug plan option. That's going to mean you're going to buy or enroll into a Part D plan that's going to have a small premium based on, again, the formulary, which is based on 5 tiers. Tier 1, Tier 2 are typically low cost. So they're going to have Tier 1 and Tier 2, which are going to be generic tiers. You're going to have a name brand tier that's going to have a higher dollar copay, a non-preferred and a specialty tier, and these can have a higher cost altogether. But the drug plan is based on your formulary need, and you're going to add this for certain states. So make sure if you're on a state retirement plan, you're asking the state, does my retirement benefit cover a prescription drug plan? And then, is this prescription drug plan considered credible coverage in the eyes of Medicare? So make sure if you are on a state retirement plan that if you're going on Medicare Part A and Part B, you're going to stay on the state retirement plan. Depending on which state you're in, usually you're going to have a very small premium, if any premium at all. Maybe you have that at no cost based on your state and your state retirement options there. But always look into, because a lot of the state retirement plans now, like the state of Tennessee, will not always cover a credible coverage Part D plan that'll cover your medication. And you want to be able to eliminate that 1% national prescription premium average that accrues every month that you do not have a drug plan. So make sure you check on that. Now, if we look at the federal, again, if you're going on Medicare Part A and Part B, most of the time, the federal government, unless you're working, and you're going to be working past the age of 65 and beyond, most of the time, state and federal retirement and government retirement is going to require you to go on Medicare Part A and Part B. And you say, well, why do I have to go on Medicare Part A and Part B? Some people ask that question because the Part B has that Part B premium that's standardized this year of $185. And they're like, I don't want to pay that. I have federal retirement. Well, the reason you have to go on that a lot of times is because they put Medicare Part A and Part B in first payer position, and then your retirement plan is going to be in second payer position. Unless, in this situation, if you're on state, federal, government, or employer retirement plan, but you're still working. Let's say you work for GE and you're turning 65 years of age, and you're choosing to stay on GE's employer plan, and for some reason it's coordinating maybe with one of the retirement option plans that you have. If not, you're going to stay on this retirement plan. You may not need to go on A and B. That is going to be a question that you need to ask when it comes to your state, your federal, or government retirement. You want to make sure you're not going to be penalized for not enrolling into your Part B. Again, that falls back onto clarifying who is going to be in the first payer position or who is going to be in the second payer position. In a normal circumstance with these retirement plans, when you turn 65, you would go on A and B, which is going to be in first payer position, and then your retirement plan is going to be on second payer position and pick up. So what does that mean as far as dollars and cents? Well, typically, if Medicare Part A has a deductible, Medicare Part B has a deductible and 20%, usually the state plan, the second payer, is going to pick up almost 100%, if not 100%, of what Part A and Part B services do not cover. So it's going to eliminate that Part A deductible, the Part B deductible, and usually it's going to cover most, if not all, of that 20%, depending on the retirement plan. You can ask questions about that, but determining whether or not your plan is in first payer position, second payer position, they're going to require Medicare A and B to be in that first payer position to eliminate the pass-through, which I'll talk about in just a second. So what happens if you don't have the right insurance in the first payer position and there's a pass-through? Well, this is a simple analogy, and so don't take this and say this is exactly what's going to happen with me. This is a very simple analogy to show you exactly what happens in first payer, second payer position. The first payer position, if there is a deductible that is supposed to be paid, and let's say you are supposed to go on Medicare A and B, and you did not go on A and B, A has a deductible. And so what that means is when it gets over here to second payer position, and the cost of that hospital stay was, say, $4,000, then typically it would be reflective of this deductible for Medicare, which is going to be about $1,600 and something right now, depending on which year you're watching this. But it's going to push back and may say, hey, there's not a first payer position, and the second payer position is not going to pick up this 100% of that portion. You're going to be left over with a dollar amount much higher than if you had a first payer position. So first payer position picks up, the second payer supplements or scoops up or eats up the rest of the cost. Without first payer position, you can be left with the thousands of dollars because that first payer position was not in place. So it's very important to understand what that looks like for yourself when it comes to state, federal government, employer retirement, and making sure you enroll into Medicare Part A and Part B when required by your retirement plan. And then for you guys that are on state retirement, maybe you're looking to get a prescription drug plan. Just to give you some facts, and I'm going to pull up a side screen here in just a second for you to help give an illustration. But most of the time your premium is going to be about 50 cents up to about 80 cents or more a month for that prescription drug plan. It's going to be based on your formulary needs. Again, that's the list of your medications, whether it be generic or name brand. Sometimes the plans will have a deductible that ranges up to the yearly Medicare standard deductible. Right now it's like $590. It may have a deductible, it may not. Sometimes people say, I want a plan that doesn't have a deductible, and I'm going to show you here in a second why sometimes having a deductible and a little bit lower premium is better, or paying a higher premium and not having a deductible. I'll show you examples of that in just a second. And don't get a penalty of the 1% monthly fee. Let's go into the examples of exactly what I just shared here in just a second. So let's look at some examples of when a plan will not have a deductible and when it will have a deductible. So what affects now, since the Inflation Reduction Act that started in January 1st, the full-blown effect of the Inflation Reduction Act that was January 1st of 2025. What happened now is some plans, the average premium right now is about $47 and some change nationally. Well, if your plan has a higher premium, it's probably going to have a lower deductible. If you have a lower premium, let's say it was a $10 premium, a lower premium, more than likely you're going to have a plan that's going to have a higher deductible. Now, reflective on the copay cost, it just depends on the formulary. Most of these plans are going to have 5 different options. For Tier 1 and Tier 2 is always generic, as I always say. Tier 3 is a name brand drug. Tier 4 typically is a specialty, or non-preferred for Tier 4, and specialty for Tier 5. And as it goes down, the dollars go up. So what affects does a higher premium means typically no deductible. Typically, if it's a lower premium, there is a deductible and it's offsetting some of the costs reflective based on the Inflation Reduction Act that's occurred around January 1st of this year that went into full effect. We have other videos when we talk you guys through the Inflation Reduction Act. You can watch those. This is just a simple example. One other thing to say before we go to the next slide is it's just important for you to make sure you have your medication all listed out, and that to go into like a software platform that we use. We put the medication in, put the pharmacy in, and based in your area, there's going to be plan selection options. There may be 15 or 7 or 8 different prescription drug plan carriers available in your area. But based on your formulary, the quantities and things like that, that's going to compute to whether or not you should pay. And honestly, it just comes down to the reality of it doesn't matter if you're going to pay $15 a month and say a $380 deductible. If the overall yearly cost of your medication, if this is going to come out cheaper than paying a higher premium and a lower deductible, all this equates out to a cost projected throughout the year. And if you're dealing with somebody that has a software platform that they can tell you that and break that down for you, they can look at the different health plan options or prescription drug plan options to determine if you need to be on a plan that has a little bit higher premium. It's going to have lower cost overall because of the copay cost being lower. All that is reflective depending on your area and the plans that are available. Don't just go with the cheapest premium. Premium does not always determine having the plan that's based on your formulary needs. And then ultimately, some of you guys will just say, hey, this is all too confusing. I'm not going to do anything. Please don't deny yourself the opportunity to at least look at your prescription drug plan options, get enrolled in the plan that's going to be the best fit for you and serve your needs the longest for this year or next year. So what if you're looking at enrolling into a Medicare Advantage plan? What exactly do you have to have? As a reminder, we have to have Medicare Part A and Part B. The A, again, is the hospital, anything dealing with inside of that hospital, like the hospital bed, the food that they give you. Part B is going to be anything outpatient. You have to be enrolled in Part A and Part B to enroll into a Medicare Advantage plan. In just a second, I'm going to walk you through exactly how these Medicare Advantage plans work, but these are called Medicare Advantage and or Part C plans. If you're watching advertisements on TV, you're seeing things pop up on social media. There's all kinds of spin that people will call this, as you've heard me say in our previous videos, the 4 parts of Medicare: Part A, Part B, Part C, and then you have Part D, the drug. It can be referred to as that, or Medicare Advantage, or Part C. When you're watching television, you're hearing all this stuff communicated. Normally, the advertisements that you're going to be seeing on TV is all about marketing for Medicare Advantage plans, Medicare Part C's. They're all the same thing. These are private insurance companies. They're HMO or PPO plans or private fee-for-service, and then there are different types of HMO plans that we'll talk about. There's different types of PPO plans, and I'm going to go into the next screen and kind of eliminate some of the myths and also help you just understand the simplicity of these plans. If it's a good fit for you, Medicare Advantage plans are not always a great fit. We like to say if you live in a metro area with heavily populated networks for these plans can be great for people like that. If you live in an area that's in a rural area where you're having to access care by driving long distances and you're in a more rural reserved area, sometimes Medicare Advantage plans are never a great fit in a Medicare supplement plan. So it's all relative to the person that we're dealing with and then just walking them through. I do like to say Medicare Advantage plans have golden handcuffs. There are some rules and regulations around steps and processes you have to do. Some of you guys that have been on a corporate health plan, you've experienced that for all of your life. Now you're going on to Medicare, or maybe you're 65 and older and you've been on an employer-based plan before. And usually the Medicare Advantage plans are not as strict as those old employer plans used to be that you may have been on, but there are some rules and regulations. If you understand them, you can use the plan effectively. There are complications with anything dealing with Medicare. People that educate people that these plans are awful and you should never enroll into them, that you should only stay on original Medicare and only enroll into a Medicare supplement, well, they don't pay your bills. So it comes down to what is the best fit for you based on the educational awareness of what plans are available to you, how to access care, and what additional things that you're looking for out of your health insurance coverage. We're going to talk about that in just a second. All right, so let's talk about these different Medicare Advantage plans or Part C plans, or again, guys, don't forget, they're referred to as the 4 parts of Medicare. So there you go, all kinds of confusion talking about these plans. Other terms that you may hear is, did you know you qualified for an MA plan or an MA PD plan? MAPD is also an acronym for a Medicare Advantage prescription drug plan. That means it has a drug coverage benefit built into the plan. An MA plan does not have the drug benefit on it. These are designed for people that are like veterans, TRICARE for Life folks, people that already have a drug plan, maybe from a retirement benefit, but that doesn't cover the Part A and Part B services. But this MA, Medicare Advantage prescription drug plans, Part C plans, Medicare Advantage, it all falls into this big, huge bucket of what I call private insurance companies that are paid by Medicare and contracted with Medicare to administer all your Part A, Part B, and can be Part D, plus the additional benefits and coverage like dental, hearing, vision, over-the-counter benefits, and all that. What I like to say is we never enroll people based on the additional benefit of any of these plans. And why is that? Well, I don't want to enroll somebody based on a dental benefit or a vision or a hearing benefit, and then all of a sudden when you go to your PCP doctor, you can't see that doctor. You're going to be very upset that you've got great dental insurance. It's maybe $1,000 benefit a year or $2,000, but all of a sudden the doctor that's been taking care of you for the last 20 years, you cannot see. So we base everything based on what Medicare Advantage plan is going to cover your doctor, your specialist, your hospitals, the medication, and the access to care to things that are important to you. And based on this, that's going to determine if we enroll somebody into a Medicare Advantage plan after we educate them on exactly what I'm getting ready to walk you through. So one of the things I like to say is Medicare Advantage plans, whether it's HMO or a PPO, it's really a nomenclature in that there's really not a lot of difference in HMO and PPOs. The major difference in a PPO plan is you can go out of network. Now, there is what I said earlier, these golden handcuffs tied to this. So an agent that tells you, hey, I'm going to put you on a PPO plan because that means you can go to any doctor, is not telling you the truth. The reality is your doctor, whether it be the PCP or a specialist, they have to agree to process payment based on basically a Medicare billable rate, a fee-for-service scale to that PPO plan. So if you go to the specialist and you have a PPO plan and you say, here's my insurance, and they say, we will not take that insurance, what they're saying is they are not willing to be able to process that back to the PPO carrier and get paid $1 fixed amount back to them. Even though on your summary of benefits in a PPO plan, what you're going to see is, you're going to see where it says in network, and you're going to have copay costs. Let's say if the primary care doctor copay is $10, then you're going to have out of network, and then this copay cost may be $35. And you will have agents that will tell you if you go to an out of network doctor, you can see any doctor anywhere in the U.S. And that is a false claim and will not stand if that doctor or specialist says, hey, we're just not taking that plan. It doesn't matter if it's an HMO or PPO. They do not have to process through the carrier if it's out of network. So you want to make sure you're enrolling into a plan based on the network and access to out-of-network doctors that will take, and I'm going to tell you what is the caveat with HMO and PPO that will always allow and always process out-of-network with doctors in just a second. So what actually can you access always with any Medicare Advantage plan? It doesn't matter what plan you so choose if you're out of network. Well, one is urgent care. This is going to be like a walk-in clinic, and with most plans that we enroll people in, that copay cost can range anywhere from about $30 to $50. What does this mean? This means if you're on the beach in Florida on vacation with the grandkids and all of a sudden suffer a sinus infection and you're like, what do I do? You can go to a walk-in clinic or an urgent clinic, walk in, you're going to pay a copay for what your plan says. This is a in-network, this is always going to be considered an in-network fee. There's not an out-of-network cost for urgent care. You're going to pay the copay of what your plan is. So it doesn't matter if you're on an HMO or a PPO and you go to urgent care, you pay the copay listed on your summary benefits for that year. And usually those are going to range $30 to $50. Now, what happens if you have an emergency? This is very important and can be very confusing, because what happens in an emergency? Well, you're sick in an emergency. You fell down a flight of stairs, you bumped your head, you've gotten a heart attack, you're on the beach, you're living through a traumatic health situation, and you're like, what do I do? If I'm out of network of your area, you can go to any emergency room and you're going to pay a copay for that. And that could range anywhere from $75, usually up to about $200 for copay for emergency access anywhere in the United States. Now, what happens if you go outside of the United States? Well, that's amazing for you guys that love to travel. My wife and I are getting ready to jump on a cruise ship in about a week or so, and we're going to be out of country. And so if we're on another island and we have an emergency, our insurance pays a little bit different, but emergencies underneath an HMO or PPO, private fee-for-service, or any Medicare Advantage plan, what happens? Well, you are going to be subject to that island. And that island does not view and process Medicare Part A and Part B claims. So usually there is a cost, a deductible or access to care fee that you're going to pay. I've had a client who broke some bones on a sea-doo accident. He and his wife, when they got back on the ship, they had to pay a $1,500 deductible to get access to the doctor. Nobody would see them. Bloody, broken bone, wouldn't see them until they paid the deductible. They were on a Medicare Advantage plan. They got seen by the doctor. I think they went on to pay about $2,200 in medical costs total. Well, they got invoiced or receipts of that. Then they came back, and what did they do? They went to their HMO. I won't mention the HMO, but they went to the HMO and they submitted that. And so what happened? Well, this was an emergency, so it got filed underneath that emergency, and they ended up paying $100 for their costs. But here's the problem. It took about 3 months for that process to take place. So this is what I encourage you guys, regardless if you go on a Medicare Advantage plan, when it deals with urgent care and urgent emergencies in the U.S., you're going to pay the copay, and that's all. So it doesn't matter if you have if you fall down a flight of stairs and you have to be sutured, you've broken maybe an ankle and you go to the emergency room, they put it in a cast. You're just going to pay that copay. If you're outside of the United States and another island, like we said, they don't see and process that copay. You're going to bring that receipt back. You're going to submit it to the carrier, if it's a PPO carrier or HMO carrier, and through the process of time, you're only going to pay the emergency room copay cost for what your plan states as the ER copay. Now, this is very important. Why I said all that is to say this. If you're going to be traveling and you're traveling outside of the United States, then I encourage you to get travel insurance. Usually that's going to cost you around $70. You can get it from your property and casualty company, or you can call us. We have a link and send it, and you can shop and do it online. And this is going to insure you a lot of times up to about $1 million of care and coverage outside of the United States. So then when that same scenario happens, you submit it to the insurance pays immediately, just like if you've ever filed a claim that's happened immediately for anything dealing with like a car accident. The process to get paid is quicker. Again, once that pays out, you can come back, submit to your HMO, still only pay, I say pay $100, but if your insurance over here is paid, it's going to pay that $100, plus it's going to cover all the additional cost and expense that was incurred when you're outside the United States. Original Medicare does not travel beyond the borders. Medicare supplements that we'll get into here in a little bit, I'll explain exactly how the travel benefit, but for Medicare Advantage plans, you pay the ER copay outside of the United States, the ER copay inside, and urgent care you have access to regardless of what plan. And then the last thing I'm going to go over with you is very important. Stick around for this last point about the different plans. All right, so let's talk about the real big differences when it comes to HMO and PPO plans and private fee-for-service plans. These are going to be plans that a lot of times are in rural areas. There's some MSA plans that may be in a certain geographical state or something that you live in, but most predominantly there's HMO and PPO plans. Now, these things will have cousins called like HMO POS plans sometimes, point of service. That means it has an out-of-network benefit. You can have an in-network HMO plan with a point of service, means you can go out-of-network and get access to care, again, to doctors, docs, and services that will bill your insurance. So that's very important. You have to ask before you go, because just because you have an out-of-network and the cost of that out-of-network may be $50, does not mean that you are going to have that doctor process that through, even though you're on a point of service plan or a PPO plan. So HMO, point of service, there's different names for HMOs, but HMO, the chassis of an HMO, typically is going to have 0 to very small premiums that you pay, and then copay costs for Part A services, which is going to be hospitalization. Those are going to be smaller copay costs. Copay costs for Part B services are going to be smaller copay costs than the typical PPO plan. PPO plans are normally going to have 0 to a higher premium cost. And then when you get into accessing care when it comes to like Part A services, these Part A services are going to have a higher copay cost per day to stay in the hospital. And in your Part B services, these are going to have a higher copay cost. So why is that? Well, the ideology behind this is that you have in and out of network options. But these options for out of network are still tied to a kind of a mystical network model, in that if the doctor is out of network and won't take the insurance, you're up the creek because you're going to be paying 100% of the cost. So I tell people, based on this, in network, out of network, PPO plans in rural areas sometimes have easier access to doctors and things in an hour drive, hour and a half drive. So if you're looking at a Medicare Advantage plan and you're in a rural area, a lot of times the PPO plan is the better option. But typically, based on cost and plan coverage, the HMO that are especially in metro areas, they're usually going to have a very robust network. So your network is not limited in HMO plans normally. Again, it's very wise to check that, making sure your primary care doctor, your specialist, your doctors, hospitals, and things that are important to your network. And your PPO plans, we have found in certain areas, the network is actually more fractured because with them having an in and out of network service, and I won't get way in the weeds on this, but the allocated amount of money that Medicare pays this private insurance company back based on their contract, there's bigger money in the HMO contract for Medicare because they have coordinated care and a more managed model of care. The PPO that has the out of network should have, in the sense, hey, you can have access to whatever doctor you want to go to. They actually a lot of times are being paid less money by Medicare and reciprocated back on a monthly basis to these carriers. Therefore, they're performing off of less money. Therefore, the network, sometimes the contracts paying the doctors, the hospitals, and things like that, the cost for those that the carrier is paying them is less money than the HMO. They're also, just to be very transparent, in the HMO models, their incentives for doctors. There are incentives that pay out sometimes hundreds of dollars for care and continuity of care that goes on throughout the year in the HMO models. And in the PPO models, that incentive can be lower, or it can just be zero altogether with no incentive. So why do I share all that with you? Normally, if somebody is looking at plan options, they have been led to believe with a PPO plan they can access any doctor anywhere. Well, that's not true based on what I told you, which is very factual. And the reality is the HMO model plans, a lot of times based on what the person's need is, the network, the things that are most important, network is going to be better, the cost is going to be lower, and the overall benefits on this plan is going to be much better for that person. Therefore, if the doctors are in network, specialists in the network, medications covered, and all things considered that are important to that person, we usually look at the HMO plan first, and then we can always enroll to the PPO plan if that's a need. At the end of the day, this goes all back to the decisions that you want to make. And sometimes people just tell us, I'm not going to be on an HMO plan. I'm only going to enroll into a PPO plan. And to conclude this video, I'm going to tell you exactly why people always want a PPO plan, and really the big mystery of why the HMO is so feared by a lot of you guys that are over the age of 70 years of age. Stick around, I'll be right back. All right, so why is so many people afraid of HMOs? Well, historically, years ago, for you guys that have been based in employer-based plans, HMOs would pop up in an area like Nashville, Tennessee. We're going to put Nash for you guys that don't know. If you come to Nashville, everything's acronymed down to Nash. In Nashville, this HMO network would be very small when it comes to primary care doctors, specialists, hospitals. You had secluded HMOs, and these HMOs sometimes would only have a contract with like St. Thomas or at that point Baptist. And so people would be enrolled into an HMO plan through an employer-based plan, and they would only have access to certain primary care doctors, and that could be in conjunction with the doctor group like St. Thomas or Baptist, or like a Vanderbilt. And so what happened was when they enrolled into a Medicare Advantage plan, now all of a sudden they're saying, hey, you know, I don't want to be succumb to this small network of doctors and hospitals and everything that's in this like Vandy group only. And so reality is this is an old school way of access to care, even for employer-based plans. Most HMO models sometimes will have a very large, robust network of access to primary care doctors, specialists, you know, hospitals, all these different matrix of things that you're looking for. And there's really not a limitation on access to care with HMO models. But for you guys that are probably at about 70 years of age and older, you've experienced these very small HMO models where it's just around a doctor or hospital. Hospital group is what I like to call them. Therefore, if it's associated with a hospital, it's dealing with the doctors that are in there, the specialists that are in there, the care access. Now, HMO models, when you have a metro area like Nashville, most HMOs are going to be like, you know, you've got St. Thomas, Vandy. Here, you're going to have and other networks like it's a network here called Heritage. It's a huge group of doctors. And so just to simplify this, one of the main carriers in the Nashville market, well, they're contracted with all of these. And that means, you know, if you're wanting to be able to go to an HCA is the other one, HCA hospital, or St. Thomas or Vanderbilt, or access Heritage doctors, which are hundreds of doctors and specialists, and all the doctors and specialists within this big, huge group. Well, in Nashville, when you enroll into most of the major HMO carriers, you have a big, huge option of access to care. You're not limited to just one hospital over here that would be like St. Thomas, and you've had a bad experience and want to be able to go to another hospital, you have a huge access to care. So that is the myth that a lot of times the HMO has a very small, compact, based on historical experience with people that are 60, 65 and older, especially if you're 70 and older and you've been on an employer-based plan that did have a very small plan. Medicare Advantage plans now do not have that. Hopefully this helps you guys. Stay tuned for our next video. We'll be back in just a second. So what's kind of your next steps? Well, for us, you would click below, schedule a time to be able to talk to one of our licensed professional agents here in the office. We're going to be able to guide you through exactly, one, to simplify Medicare for you or make your life easy by making Medicare simple, educate you on the different health plan options, figure out what is the best fit for you. If it's a Medicare supplement, then we're going to rate, shop what plan is going to be the lowest premium for you. Historically, what plan has been stable to be able to help enroll you into the plan that's right for you. And then also look at the drug plan, educate you on why a drug plan is essential. Look at the drug plan based on your formulary and enroll you into what's going to save you the most money for this year. If it's a Medicare Advantage plan, we're going to look at all the things that are important, like your doctors, your specialists, your hospitals, access to care. We're going to make sure we enroll you in a plan that allows you access to care first, and then provide the lowest cost possible on the plans that have the lowest copay cost for you. And then the additional benefits are really the last things that we look at. Some people start with the additional benefits. They want to sell you on a food card. They want to sell you on the dental benefit. They want to sell you on hearing aid benefits and things like that. To me, what's most important is access to care to your doctors, to your specialists, the hospitals, the things that really matter most to you when it comes to your life and your health. That's the most important thing to us. And then looking at what plan best fits your needs when it comes to that, and then looking at the additional things after that. So you would do that by scheduling a call below. And one of the biggest things we say as far as our agency is we're going to serve you for the rest of your life. When it comes to customer service, we serve others in all that we do. Customer service is just part of our agency model when you call in, to be served well, to get enrolled properly, to be educated properly, but also on the backside, just to be informed and educated along the process for years to come. We're able to reach out to you through birthday cards, through a thank you card, a birthday card, a Christmas card every year, an annual reminder letter. We do calls, we do texts, we do all kinds of communication to our clients, and we want to be able to manage that relationship well, earn your trust, and then you're able to call into the office to have questions answered, a lot of times with problems and situations that occur over a lifetime with any client that we serve.